Good morning, and thank you all for attending week 2 of BFSG's 4-week summer webinar series, today covering Medicare and planning for healthcare and retirement. A few housekeeping items before we begin. There is a Q&A box in your Zoom menu on the screen, which is distinct from the chat box. Please type all questions throughout the session today in the Q&A box, and we will cover all responses at the end of the approximately 30-minute presentation during a live Q&A for all participants. For compliance purposes on a live and recorded webinar, we will not be unmuting lines. Please type your questions in. Should your questions be more personal in nature, we will provide contact information at the end of the webinar and encourage you to reach out directly rather than asking personal questions on a live and recorded webinar. The same registration link will also be active following the webinar for a full on-demand replay in case you would like to listen again and share with your friends and colleagues. Lastly, this series is a result of numerous surveys where we saw these topics were the most requested. At the very end, there will be a link with a 1 to 2 minute post-webinar survey to provide feedback, including future topics you would like to see. With that in mind, let me pass this over to our panelists for introductions. Paul?
Thanks so much, Chad. Hi, everyone. My name is Paul Horn, Senior Financial Planner with Benefit Financial Services Group. I'm part of our wealth management team where I help individual clients with their financial planning needs. Thank you so much for tuning in to today's webcast about planning for healthcare and retirement. Aside from myself, we will have Keith Johnson will be a presenter for the next 2 weeks. Keith is part of our institutional group where he helps plan participants with their financial planning needs. And finally, we have our special guest today being Yolanda York. Yolanda brings over 40 years of experience working with the Social Security Administration, and we're very lucky to have her. Yolanda, can you tell us a little bit more about yourself? Yolanda, I think we're having some sound issues there. Yolanda, we're having some technical difficulties, guys. Give us just 1 second here. All right, and while we have Yolanda working on that, Chad, can you go ahead and kick us off with our first poll?
Yep, thanks, Paul. So our first poll, as we move along, this will be interactive. We have 2 polls today. If you have the chat box open somewhere as well on the side, as we go through this and we have some important forms, I will also share some links in case anybody would like to download those forms if you find out that they are relevant for you. But this first interactive poll for all of you following along on the screen is related to healthcare costs in retirement. Just a question, just to gauge the audience on your thoughts. How much will a couple, 2 people, typically pay for healthcare throughout retirement? I will launch this in just a moment. I'll leave it up for about 15 seconds. The answers are $200,000, $400,000, $600,000, and $1 million. I'll leave this up again for 15 seconds. Please vote now. And with that, I'm going to close polling. And let me share the results with the group. We have the bulk of people that, about 44% saying $400,000, 26% at $200,000, 21% at $600,000, and then 8%, definitely being those Austin Power fans out there with $1 million selected. Let me stop sharing results and pass it back to Paul.
Thank you so much, Chair. It looks like we have a lot of smart people in this room, so that should make our job today fairly easy. The average healthcare cost for a couple throughout retirement is actually going to be about $400,000. In fact, healthcare is going to be the most expensive thing that most retirees will pay for during their retirement. And how that breaks down is it's going to be mostly in the premiums. That will cover about $288,000 of the cost that someone's going to pay in retirement. And then aside from that, a couple would have about $90,000 in out-of-pocket expenses. This would be for your co-pays, deductibles, dental, vision, things like that. So if you combine these two numbers, it's going to give you about $375,000 in total costs. Realistically, if you're a couple that's age 65 enrolling in Medicare for the first time, you could reasonably expect to spend about $800 a month or more on insurance premiums with Medicare. And of course, that'll be dependent on the type of coverage that you choose. Now, the next question becomes, why is healthcare so expensive? Unfortunately, the answer is pretty simple with inflation. If we look at inflation over the last 17 years, what we've seen is health insurance premiums have increased over 200%. During that same time, the overall rate of inflation has only been about 46%. In fact, workers' earnings has been about 60%. Historically, healthcare costs tend to double or even triple the rate of inflation. Historically, healthcare costs grow at about 5% to 6% per year on average. And Yolanda, are you able to join us?
Not yet, Paul. Continue.
Okay. All right, so let's talk about what it is that makes people eligible for Medicare. The most common one is going to be someone that turns age 65 or older. Other qualifiers would include someone that is 24 months, that has been on Social Security benefits for 24 months, someone that has ALS, amyotrophic lateral sclerosis, permanent kidney failure, and they receive maintenance dialysis or a kidney transplant, or potentially exposure to environmental health hazards. This most commonly would be, for example, coal miners would be a good example here. Now, there are some individuals out there that are turning age 65 and still working, and they actually have an interesting situation where they have the choice of either taking their Medicare at age 65, or depending on their employer health insurance plan, they actually could delay taking a Medicare and still be covered by their group plan with their employer. So if that's the situation you're in, you're going to want to talk with your employer to make sure that they have an eligible plan, and then talk with a professional to see if which one's going to be the best choice for you. And with that, Chad, we're going to roll it back to you for our next poll.
Great. Thanks, Paul. So the last poll for today is just a fun question. Do you think Medicare Part B covers vision, dental, and hearing costs? With that, let me launch the poll. And again, I'll leave it up for about 15 seconds. Well, let me close polling out now. With that, we have about 68% that say no, 13% say yes, and about 19% say not a clue. Let me share that results, and then I'll pass it back to Paul to continue.
All right, thank you so much. Again, I see everybody here is very intelligent. So let's talk more about the basics of Medicare and what it really entails. The first part is what is called Part A, which covers your major medical costs. So Part A, typically for most individuals, there is no premium for this. This is something that you've been paying into during your working career. This is going to cover your hospital stays, your surgeries, your major sickness, things like that. Then we're going to have Part B. This is going to be your outpatient. Think of Part B as anytime you go to the doctor and you're able to go home same day, that's most likely going to be covered by Part B. The premiums here get a little more complex, and we're going to talk a little bit more about that in a second. And then finally, we have Part D, which covers drugs. So D is for drugs. Now, this is, of course, for prescription drugs, not the other kind of drugs. And this will be offered by private insurance companies that are approved by Medicare.
Okay, that was good.
Yolanda, I think I can hear you.
You can hear me. I had a restart again. Sorry about that.
Thank you for joining us.
Yeah, my pleasure. So let me just chime in onto the Part B. and the screen that we're looking at. So the most important thing for everybody to remember is how you get Medicare. You have to have worked long enough, which means you need to have 10 years, 40 credits to be entitled to receive the Medicare Part A and B. If you don't, you can always buy it, or you can always go off of a spouse. So let's say I've never worked a day in my life, but my husband has his 40 credits. I would, when I become 65, I would be eligible for the Medicare. So the reason I wanted to give you this information, the premium is $144.60 for the Part B. But let's talk about, let's say you're a county employee or a teacher and you don't have those 40 credits, right? Let's say you have 39 credits. Would you be eligible for Part A? You would have to pay the copayment. And for Part A in 2020, if you have between 30 and 39 credits, you would be paying $252 per month for the Part A. If you did not have those 30 credits, or yeah, the 30 credits for the Part A, the premium would be $458 per month in addition to the Part B. So I just wanted to make sure, because it's one of the questions people always ask me, and that's if you're like, for example, a county employee and you don't have the 40 credits, and they'll say, do you think it's worth it for me to go back to the workforce and earn that extra credit? And the answer is always absolutely, because now you'll have the Part B that you won't have to pay that heavy Part A premium.
And Yolanda, just to clarify too, when you say a credit, can you explain what that means?
Okay, so back in 1978, they used to call them quarters. Today, they call them credits. So you would have to earn 1,400, what is that number? Let's see, let me look that up. $1,400 to earn one credit. You earn a maximum of 4 credits per year. In a 10-year period, you would have your 40 credits.
And I know we talked a little bit more about credits last week. These are the same credits that someone would find on their Social Security statement, correct?
Yes, yes. So when you create a My Social Security account, it'll tell you how many credits you have.
Okay.
So
Perfect.
It's important that everybody does that. Create a My Social Security account at socialsecurity.gov and just go to the My Social Security. You can do this online. It'll take you 7 to 10 minutes.
Perfect. Yeah, and if you missed last week's webinar, we'll give you a link at the end of today's call so you can listen to that one as well. So looking more at the Part B premiums, the premiums that you pay start out at $144 like Yolanda talked about, and they're going to increase from there depending on what your annual income was. So what happens here is there's what's called the hold harmless provision. So for any individual that is currently on receiving Social Security benefits and on Medicare, what happens is they are guaranteed that their Medicare premiums cannot increase more than the cost of living adjustment they get on their Social Security. So for example, the cost of living adjustment for Social Security for most individuals, was 1.5%. That means their Medicare premiums couldn't increase by more than 1.5% this year. As we talked about before, the average increase is about 5 to 6% per year for Medicare costs, for healthcare costs in general. So the question becomes, who's paying the difference? And the answer is individuals that are enrolling into Medicare Part B for the first time. What happens is they're going to look at the last 2 years of earnings prior to joining Medicare. So for most individuals, that'll be at age 65. So they're going to look at your earnings when you were 64 and 63. And based on that, that's going to help determine the amount of premiums that you're going to pay for the rest of your life. So if you're a high income earner, what's going to happen is they're going to say, congratulations, you've done a great job. Now, as a result, you get to pay a higher premium for the rest of your life.
Well, wait a second.
Now,
let's give the audience a break because there could be some changes, okay? The premiums can fluctuate. So that's important to know. But if you are a very healthy wage earner with, let's say the bottom line, $500,000 if you're single, or $750,000, and that income is never changing, you will always pay the $491 for the Part B, which is the income-related monthly adjustment premium. But let's say you have a change in your life-changing event. So for example, you marry, you divorce, you have the death of a spouse, you stop work, you have a work reduction, especially right now with the pandemic. There's a lot of people who probably have lost their income. And if that's the case, then you can complete a form SSA 44. And all you have to say to Social Security is, I have a life-changing event, and it will reduce your premium from maybe $491.60 that you see at the end to $144.60. Okay, so it's important to know that the premiums can fluctuate. I can share one scenario. My mother is single. Her income is under $87,000. 2 years ago, she sold a home. And because of the net proceeds, is that what we say when you sell a house? The net proceeds of that real estate, that put her onto the second category. So for 1 year, she had to pay the extra premium for that entire year. The following year, it went back to normal. So if you feel that you are going to have a life-changing event, Paul and Chad have dropped the form at the bottom of this slide, and you can click on this form or probably print it and then just complete it, keep a copy, and bring it into or mail it into your local Social Security offices, because again, they're all closed at the moment. And keep a copy again, and that will change your premium. So wanted to add that.
Hey, all, this is Chad real quick. So I want to jump in. The PDF will be available in a post-event email tomorrow. But in the meantime, I did paste in the chat box a link. So if you did have one of these events that Yolanda mentioned, there is a link in the chat box where you can click on that and open up it in your web browser to save for after the presentation today.
And the other thing that I want to add to when you're looking at the premium is that there's 4 ways to pay your Medicare premium. Okay, one is, let's say you start collecting your Social Security benefits when you're 62. When you become 65, Social Security practically knows everything about you. So they will automatically send you this Medicare card in the mail, and they will automatically start withholding the premium from your Social Security check. Other way of paying for Medicare would be, let's say you do not want to start collecting Social Security until you're 70 to delay those retirement credits, but you should take Medicare at 65 because you have no health insurance. So you sign up for Medicare, you could sign up at socialsecurity.gov, apply directly, takes you 12 minutes to apply online for Medicare. And then they could bill you every 3 months, or you could pay online through the Medicare.gov portal, or you can send them, let's see, checks or pay with credit cards. So free service there. Thanks, Paul.
Thank you so much. All right, Yolanda, can you talk to us about the different ways to enroll in Medicare?
So yeah, this is important. Actually, this is very important for people not to forget. The fear is, oh, I'm not going to have health insurance and then I'm going to have a penalty. So let's understand that, okay? The initial enrollment period is when you have a 7-month period, and it begins 3 months before the month of your 65th birthday. And it concludes with 3 months after. So for example, if I'm 65 next August, I could have applied for Medicare 3 months before, or I can apply in August, or I can apply 3 months after. Again, you go through socialsecurity.gov and apply online. If you are on Social Security now, don't need to do anything because they will automatically send you that Medicare card. And another thing to remember, Social Security used to have your Social Security number on the Medicare card, and Social Security would always say, guard your Social Security number. And here was Medicare with the Social Security number. So now they changed that. You have an 11-digit Medicare number, okay? General enrollment period. So if you made the mistake and you didn't apply for Medicare during your 7th period, your initial enrollment, you have to wait until the general enrollment period, which is every year, January through March 31st. And then coverage begins on July 1st. And the penalty then applies. The penalty is 10% more for every month that for every year that you delayed. So if the premium today is $144.60, you would add 10% to that, okay? If you're 5 years late, that's 50% on top of that $144, okay? Special enrollment. Okay, this is great. People have options here. So you are going to be that person that probably continues to work and you have coverage through your employer. You are going to go way past age 65. So let's say maybe you're 72 and you finally decide, okay, I might just retire. What you can do, if you have health insurance through your employer, you will need to show Social Security 2 things. A letter from your employer, it's called a special enrollment letter, and you will be completing a Form 40B to say, yes, I now want to start collecting Social Security. So you get the employer to complete the letter, you bring it, you mail it to Social Security again with this Form CMS 40B that's also, you can click on this website and bring them to the Social Security office. Caution again, make sure you keep a copy. You have 8 months to apply for the Medicare from the day you applied, you stopped working. I have always said to everyone, you should apply for Medicare under the special enrollment the week you terminate employment, because if you procrastinate, you will be out of your enrollment period. And if you're 72, there's no ifs or buts. You now have a 7-year penalty, okay? So like, again, 40 years working at Social Security, I can just tell you, just be very, very cautious with the special enrollment. Paul, any other thoughts?
No, that's it. And then there's the form. We have the link here for the CMS 40B.
Yes.
Which will be available. All right.
That's also in the chat box for anybody that already applies to, and that you like that link and open it up in another browser menu. That's available to you as well.
Thank you so much, Chad. All right, and then let's talk about the other enrollment periods. So it can seem a little bit overwhelming here enrolling for Medicare. Just keep in mind, it's very similar to how you enroll with insurance with your current employer. You have your initial enrollment period with your employer when you first start. There may be some special enrollment periods if you have a life-changing event like getting married, for example. And then there's annually an open enrollment period to make changes to your existing benefits. You have the same thing here with Medicare. And the open enrollment period is from October 15th through December 7th of every year. And this allows you to make changes to your existing benefits. If you're on Medicare, it's a great time just to review with a professional. Just make sure you have the best coverage at the best price for you.
What I would add to this is that don't get confused, these 2 different periods. If you had to focus on one thing only, remember your initial enrollment period to take Medicare, because what we're talking about in this slide is all secondary, okay? Nothing happens unless you have Medicare Part A, B, and D. So what we talked about in the slide before, really, really focus on that. At least get the Medicare. This, if you missed a year and you didn't change your Advantage, that's okay. It's not as traumatic as the other. And I could be wrong, because, you know, maybe you need a bit major surgery and you picked the wrong group plan. That could be the case. Okay,
yeah, but the other ones start and then use this one second. You're correct.
Yeah.
All right. You've talked a little bit already about the late enrollment penalties. But again, it's just going to be 10% for Part B for each 12-month period that you could have had it but failed to sign up. Is there anything you'd like to add here?
Well, the highest penalties I've ever seen for someone who just didn't take care of this. And the reason this happened to this lady is because she moved to Spain when she was 65, and she knew she would never need Medicare living in Spain, right? There's no coverage other than in the United States for your Medicare. So if you go on travel, it's not going to cover you unless it's an emergency from point A to point B. So anyway, this lady went to Spain, came back 15 years later, and she had she decided she needed to sign up for Medicare Part A and B. And guess what? It was $750 penalty. So
Wow.
For those of you who are thinking, but we are going to be traveling the world, we're not going to be in the US for, let's say, 2 years. I want to cancel the Medicare. You can cancel it, but if you pick it up again, you would have to wait for the initial enrollment period, and then you would have a penalty. So think twice before canceling the Part B. And the only way you can cancel the Part B is if you tell Social Security, I absolutely refuse to pay the Medicare Part B. You give them the reason, you sign, and you send it to them, because now they have your word, your signature that you decided to cancel the Part B. Yeah.
Okay. All right, so we've talked about the basics of Medicare with Parts A, B, and D. Yolanda, can you talk to us a little bit more about Medicare Advantage plans, which is a type of supplemental coverage?
I think they're absolutely fantastic for those people who need a secondary insurance. So when you sign up for the Medicare Advantage, what you are saying is that Medicare is paying 80% of your bill, and you have to pay out of pocket 20% plus the co-payments. If you, or pardon me, just the 20% that Medicare doesn't cover. If you don't want to pay that Medicare 20%, then you sign up for this Advantage plan, the Part C. And then, you know, there's some plans where you don't even have to pay them anything on a monthly basis. They are so happy to have your Medicare premium that they're not going to charge you an annual or a monthly premium. Some companies don't even charge you co-payments. So you can do your homework and researching the best HMO or PPO in your network. And if you're in Orange County, I don't even know how many hundreds of insurances you have available. If you're in the East Coast, it's a whole different level. So you need to really do your homework. The Medicare policy is offered through private. Did you want to cover that?
The Medigap, there's some stuff here I'd like to touch on for sure. So the Medigap policy is another option for supplemental coverage. Again, trying to cover that 20% copay that Part B has. These Medigap policies are going to pick up where those leave off. You may have heard other terms like Medicare Supplement or MedSup. Those are the exact same thing as a Medigap policy. In fact, those terms are synonymous. I just prefer the Medigap policy because I think it's a better descriptor for really what happens. With these types of policies, there's some great benefits that they provide. The first one is you're guaranteed eligible, and they cannot charge you a higher premium if you have pre-existing conditions. So if you have a pre-existing condition, you're guaranteed coverage with a Medigap policy. And secondly, if you have any sort of major medical event throughout the year that happens, these policies are guaranteed renewable, so they can't just kick you off the policy. So these are great ways to have additional insurance to cover more coverage, and they can't just kick you off because you have a long event or you have some sort of pre-existing condition. And just keep in mind with these policies, as we talked about in the poll there, they're not going to cover certain expenses like long-term care, vision, dental, hearing aids, or eyeglasses.
You know, Paul, the other reason for the Medicap is that it's a great insurance to have for emergency foreign travel as well. So if you look into that package, that's something you would definitely want to pick that up.
Definitely. So right now, Medicare may be feeling clear as mud. I would like to point you guys towards a couple of additional resources. These are third parties. They're not affiliated with us in any way, but they can help provide guidance and given your individual situation for Medicare. The first one here is going to be for California residents only. That's the Health Insurance Advocacy Program, known as HICAP for short. Here is their phone number and link to their website. And if you live in California and would like an alternative, or if you live in another state outside of California, you would want to use the State Health Insurance Assistant Programs, known as SHIPS for short. And again, here is their phone number and link to their website. These are great resources that can help you with your individual situation. They could even provide guidance in terms of whether you should be looking at a Medigap policy versus a Medicare Advantage policy.
Right, very good. Good job.
Aside from that, there are some additional, potentially some additional help out there. Yolanda, can you talk to us a little bit more about the $5,000 a year benefit?
Yeah, so the extra help is available for beneficiaries with limited income. So let's talk about who's the limited income. If you have, let's say, someone in the family, a circle of friends that has, they're a couple and their income is under $29,160, and they're 65, then obviously Medicare could help them, or pardon me, Social Security would help them with the $5,000 a year for premiums and copays. If you are single, the income level has to be $14,610. And Paul and I decided to share this slide because, you know, maybe it doesn't apply to you, but sometimes there's someone in our circle of friends that could benefit from having these premiums be paid by Social Security. And you apply at socialsecurity.gov and just say, hey, I'm looking for the extra help, and they would be happy to do that. So again, that's socialsecurity.gov. Thanks, Paul.
Thank you. Thank you so much. All right, so let's talk a little bit more about the factors to help determine whether you should be looking at maybe a Medicare Advantage or a Medicare Supplement plan. The first thing that we're going to want to look at is going to be kind of your own health history and your pattern of going to the doctor. If you're someone that's fairly healthy and maybe goes to the doctor once a year or once every other year, you may not need a lot of policy that has high premiums. But if you're someone that maybe goes to the doctor on a regular basis, maybe you have a pre-existing condition you're being treated for, you're going to want to look at maybe getting a policy like Medigap coverage, which may have higher initial monthly premiums, but it can result in lower out-of-pocket expenses. Aside from that, you're going to want to look at the kind of choice and flexibility. These policies are typically designed to look similar to an HMO or a PPO, so you're going to want to take that into consideration as well. And then finally, it's just going to be your lifestyle. As Yolanda already talked about, if you're someone that's going to frequently travel outside the US, you may not want to consider an Advantage plan because it won't cover you outside the US.
What I want to add to that, let's just go back one because you mentioned, do we need to, if you really don't use doctor facilities, and you stick to just the original plan of Medicare Part A and B, original plan, I would just advise that if you stick with just the Medicare, which a lot of people do, the only question you have to ask your doctor is, do you accept assignment? If they say yes, then that means that if Medicare is paying, let's say $150 for the consultation, but your doctor says, no, my consultation fee is $160, then you would have to pay that extra $10, okay? Other than that, there's all these other options that you do have. Thanks, Paul.
Yeah, no, thanks. And you bring up a good point there. Just keep in mind, with a Medicare Advantage or a Medigap policy, those are supplemental policies. They don't have to be chosen. Most people do choose them for the additional benefit just because they don't want to pay that 20% copay. And my lights are going out here. All right, so let's talk a little bit more about some planning considerations for healthcare. When we're doing some financial planning for clients, one of the things that we want to try and do is be as tax smart as possible. So one of the best ways to do this is using Roth strategies. For those of you that may not be familiar, using a Roth account, that's money that goes into an account after tax, and then that money grows tax-free for the rest of your life until you use that money. That can be a great way to help cover these additional costs they were expecting in retirement. Another option maybe was called a Roth conversion. That's where you take money from a traditional account, so like a 401k, a traditional IRA, 403b. You take a portion of it and move that into a Roth account When you do that, you pay taxes in the year you do that conversion, but the benefit becomes, again, that tax-free growth going forward. These are great strategies to help cover additional healthcare costs in retirement. We want to be very cognizant of these strategies. Again, when you're in that period, that 2-year window before you take Medicare, trying to reduce your potential premiums for Part B if we can help it. Other things that we're going to want to keep an eye during that window, that 2-year window. So again, if you're 65 and that's when you're going to enroll, during 63 and 64, you just want to be careful with things that are going to boost your income, like stock options, Roth conversions, selling a home, like the example that Yolanda gave. These sort of things that happen one time can boost your income and unfortunately maybe increase the premiums that you're going to pay a little bit. And then lastly, if you have a health savings account through your employer, if you have a high deductible health plan at your work and they give you access to this, this is a great resource to help with costs in retirement. With these accounts, with a health savings account, the money doesn't just go away. The money goes in pre-tax, it grows tax-free, and it can be used tax-free for qualified medical expenses, and that includes your expenses in retirement. So if you have access to health savings account now, it's actually best to try and max it out to the best of your ability and pay for your current medical costs out of cash flow if you can, and delay using the health savings account until retirement to help with these additional costs. So let's talk about next steps. Thank you so much, you guys, for joining us today on the call. Next week, we're going to have Keith and a special attorney talking more about estate and legacy planning. If you have not already enrolled in that one, I would encourage you to do so. You can do so by registering at https://bfsg.com/bfsg-university, or even easier, there'll be a link for this right in the chat box. Thank you, Chad, for that. And then secondly, if you missed last week's Social Security webcast, or if you would like to re-listen to it, there'll also be a link in the chat box that you can use to register and listen to the Social Security webcast. If you'd like to reach me with any further questions, please email me at financialplanning@bfsg.com. Myself or another certified financial planner will respond to that question. And if you'd like to reach Yolanda, please email her at info@socialsecuritymyths.com. We'd be happy to help you guys with talking about the appropriate Medicare coverage, developing a tax smart strategy, or if you'd like to get our free white paper on Social Security and Medicare facts, Medicare and the financial challenges they face, feel free again to reach out to me and we'd be happy to send that to you. This is our wonderful financial planning team. Each individual has at least 10 years experience working with us, and everybody has different expertise in different areas. So we have a great group here. So if you email that financial planning, it may not be myself replying, but it may be one of these wonderful individuals. Thank you so much, everyone, for joining today's webcast. And Chad, please go ahead and take it away with the question and answer portion.
Great, thank you, Paul and Yolanda, for a great presentation again. One more time, before we start the Q&A portion today, we'd like to thank anyone who does drop off the call before we get to the end of the questions. I mean, I think we do have over 40 really good questions that we're going to respond to that might answer, a lot of things for people that remain on the call. With that, if you use the Q&A box, which again is distinct from the chat box so we can keep our questions organized and respond to them in the order they're received, please continue typing questions in. As I mentioned on the top of the screen today, there's a QR code. We'll also have an automated link coming out tomorrow that will have links to download both the slide deck from the Medicare presentation. We will also include a link to download the Social Security presentation from last week, as well as a link to register for the estate planning presentation that's happening next Tuesday at the exact same time. All of the links from the original registration links in the brochure that you received will also mean that these presentations, the audio and video, are available for on-demand viewing using the exact same link following the presentations. So for any of you that want to watch a replay of either of these presentations, they will be available right after the presentations are complete. With that, let me jump ahead and start with our first question today. It should be straightforward. What determines a credit?
So that's $1,410 in wages or earnings. That means you would have to earn $1,410 to earn 1 credit. The most you can earn in a year is 4 credits. Okay, so multiply 1410 times 4.
Excellent. And so the next question we have is, if you have 40 credits, do you have to pay a premium for Part B?
Yeah, the 40 credits is what makes you eligible for the Part B at the, trying to get back to that slide there. That's what's going to help make you eligible for Part B. But then you're still going to have to pay these premiums based on your wages in the 2 years prior to signing up for Medicare.
And then, so next question is, I'm a veteran and am covered by the VA now. Do I still need Medicare?
The answer is yes, because when you become 65, TRICARE for Life wants you to sign up for the Part B of Medicare. And if you do not sign up for Part B, TRICARE for Life or the VA will drop you from their insurance, because they also want you to get the Medicare Part A and B, because they will be billed first before the VA gets billed. Okay, so that's the reasoning for that.
Okay, so our next question, goes back to our very first poll. In the first poll, we learned that the cost of Medicare premiums averages about $208,000 during retirement. Is that with or without credits?
That cost is with credits. That's someone that has those 40 credits and is fully eligible. Those numbers would be higher if they didn't meet the credit requirement and had to pay additional out-of-pocket expenses for Part A.
And so our next question, vision and hearing are not covered under Part B. Are they covered at all?
They can be covered. So the regular checkups, this is why you would have to sign up for a secondary, the HMO, because then they would be covered by that.
Yeah, it could potentially be covered by like a Medicare Advantage plan would be the most common one where you might see that.
Great, and then our next question is income the same as wages, or does it include other investment income?
Okay, that depends what we're asking for. Wages and income to determine the Medicare premium, then the answer is yes.
My guess would be Part B is what they're referring to.
Okay, then let's read that question again, Chad.
It says,
the difference between income and wages, these numbers here, assuming we're talking about Medicare Part B, these numbers here, whether you're couple or single, these are going to be based on what is called your modified adjusted gross income, which is going to take all income, including tax-exempt interest. So that would be the best way that I would answer that, I think.
So the answer would be yes, that includes income and wages for this chart that we're looking at, the premium. Okay.
Cool. Our next question is, can you please repeat how much must be earned to obtain a credit? Was it $104,000 per credit or credit per year?
$1,410 earns you 1 credit.
And is there a max of 4 per year?
And there is a max of 4 per year. So let me just make this.
That's 1,410 times 4.
That'd be $5,640. So if you earn $5,640 in 1 day, you now have your 4 credits for the entire year. Okay?
Yep, perfect. And so for the Medicare Part B premium, what happens if I retire at 60 but don't start Medicare Part B till age 65? How will my premiums be determined?
Just normal. You would pay whatever the premium is at age 65, because 65 again is the earliest you can get Medicare Part B, unless you were disabled and you were on disability for 24 months, then you would be eligible earlier. But if the question is, if you retire at 60, right, and do not collect your Social Security benefits until 65, it's not a problem. There's no penalty. There's no gap, because 65 would be the earliest you could be entitled initial enrollment period.
And so our next question is right in the exact same vein. You're retiring in early 60s and then reporting very little income until age 65. What is the likely Part B premium? Like, how would it be impacted?
Oh, okay. So the premium right now is $144.60. If you're under this slide that you're sharing, thanks, Paul, for sharing this slide, because you're looking at your income. So you have no income, you have no real estate, you have nothing, then again, depending where you are, that's what would be your Medicare premium. You might be wanting to ask, does the Medicare premium go up every year? The answer is almost every year. And some years it's been by $5, $10, other years has been no change. So there is a small increase, but not too much.
And then so our next question, which I think the same slide would apply, is the higher Part B premiums based on higher incomes. Is that based on your income before retirement, or is that if you're getting Medicare while still employed?
This is when you apply for the Medicare. So again, I'm so glad they're asking this question, because if you now retire from employment and your income has changed, they're not going to look at what your income was 2 years ago. Social Security will now look at what is your income today. And that's why you're going to complete the form SSA 44 to say, I have a life-changing event. My income is the following, and your premium would be based according to that, to your new income.
Great. So our next question is, how often do premiums change?
Annual. Unless, well, basically annual. I was going to say unless you fall into a life-changing event, and if Social Security has to drop it because your income has changed, it would change that month. But again, that's an annual thing.
Yep. And so the next one is when looking at the premium on the right-hand side of this page, is that an annual, quarterly, monthly? Like, what is the time period for that?
That's a monthly premium. This is a monthly premium that you pay.
And so next question is, can I still apply for Medicare 3 months before turning 65, even if I'm still in the workforce and have medical, dental, vision insurances from the company?
Well, I would say, why would you want to do that? If you have complete coverage through your employer, I would not want to pay a Medicare premium while I'm employed. I would apply for it when I terminate employment, and then you would fall under the special enrollment period, SEP, okay? And you would apply for the Medicare when you terminate employment. And again, this is what I had said earlier, do it the week you terminate employment. You'll be safe.
Yeah, I would definitely recommend also potentially talking with a financial planner on this, just because from realistic experience, I've had clients that work at a small firm where they can maybe continue to take their health insurance, but their employer wasn't paying much for their healthcare insurance. So it was actually cheaper for them to switch to Medicare, even though they had the other coverage like the vision and medical, or vision and dental. So that is something to take into account as well, is really comparing the cost between the two. If you're 65 and you're eligible to, and you're still working, I would definitely compare the cost between the two.
Oh, Paul, that's a great tip. That's a really, really good point to bring up. Thank you.
So next question is, on the same veins, I would like to keep my private insurance, but if I sign up for Part A only to keep future premiums down, will my private insurance remain the primary?
Yes. Yes. So at 65, you can sign up for the Part A, and that there's no premium for that. But yes, if you want to keep the costs and sign up later for the Part B, again, you need to sign up when you first become entitled or you terminate employment.
So next question is, and this is for somebody living in California specifically, is what if I live in California and continue working at age 65, but then move at age 66 to another state?
Medicare is federal, so it doesn't matter where you are in the States.
Yeah.
Cool. Next question is, do I have to buy Part B insurance from Medicare, or can I get that from a third party?
You only get it from Social Security Medicare Part
Yeah.
B. And if you don't have the Part A and B, no third party will touch you because Medicare is the primary. And that's the only reason somebody is going to want your business is because you have the Part A and B. And the other thing, Paul, I don't know if we touched on this. Did we talk about the Part D? Yes, you did. You covered the drug prescription plan, right?
Yeah.
Okay, great.
Okay, so next question is the same income earnings from 2 previous years used to determine Part B premium used every year, even if you have a dramatic drop in income in 1 year? Or is the 2 previous year timeframe kind of like rolling forward each year?
So the 2-year window is based on when you enroll for Medicare Part B for the first time. So for most individuals, that's going to be age 65, which would be, for them, then the income in ages 63 and 64. Maybe you're someone that's working, like some other people have talked about, taking their employer's benefit and delaying Part B until maybe they retire at age 70. If that's the case, then they would look at your income in years 69, ages 69 and 68. So again, it's the 2 years prior to whatever age you are when you enroll in Part B for the first time.
And I would just add that they're always looking at the last 2 years. So if your last 2 years keeps changing, Social Security will be changing that premium accordingly.
Well, yeah, and it's important to mention too here with the hold harmless benefit, once you start collecting Social Security and you're on Medicare, the premiums will be locked in pretty much at that point. You're part of the hold harmless provision. They can't jump on you that as much.
Well, but there is an exception to that because if the cost of living is higher, then the Medicare premium can increase. It's based on, it all has to do with this COLA, the cost of living, and that's what the whole harmless provision affects,
Yeah.
cost of living. So yes, it can change as well.
So the next question, and I'm assuming this is for somebody that has already stopped working, is what if I just want to keep my private insurance?
Okay, that's not a problem. But if you ever want to get Medicare and your private insurance says, we are now dropping you because we need you to be on Part A and B, and you're much older, you will have a penalty. And just remember that Medicare is not at all mandatory. It's just an insurance like everything else. You get the premium at this age, which is 65. If you choose not to take it, hey, that's fine. But when you do want it, it'll just cost you more if you're over the 65. And again, that's the 10% penalty per year. So I hope I answered that question.
Yeah, I would say the person's age also, it really comes into account here, because if they're under 65, that's one thing, versus over 65. Like Yolanda talked about, it's really hard to get insurance at that point, unless you're under like COBRA or an employer-sponsored plan.
Yeah, but COBRA is not a good thing, because if you go from employer, you terminate your employer, and then they give you 18 months of COBRA. Social Security Medicare does not recognize the COBRA. They're only looking at, hey, you only have 3 months to apply. And if you don't do it, you're going to be out of the enrollment period. Yeah, thank you.
Thanks, both. Next question is, does the GEP penalty apply to those with employer coverage in a company less than 20 employees?
Does the general enrollment period apply to what? Sorry.
To those with employer coverage in a company with less than 20 employees.
So if you have credible health insurance, and yes, if you have less than 20 employees, so this thing about the 20 employees, we can almost split hairs here because there's so many ways to look at that. And I'm not going to go into detail unless, Paul, you have a better answer, but I would say if you have credible health insurance through your employer, you don't need to worry about this problem if you're going to wait.
I would recommend talk with your HR when you're 65. They will let you know if the program they have is compatible with Medicare or not. And if it's not, then you're going to need to sign up for Medicare. And if it is, then you're going to want to compare the cost in your existing policy versus what you would pay on Medicare to decide which route to go.
Yes.
So the short answer there is talk with your HR. They'll be able to answer that question for you.
Great. Next question is, are we able to have a small business when we retire and still receive Medicare at 65? An example being if you happen to teach in retirement or start a small consulting practice.
Absolutely.
And so the next piece is really just a clarification. Saying, can you guys explain the initial enrollment situation a little bit? In that it sounds a little bit of a mystery to most people. I've never heard of this before.
Oh, the initial enrollment period. Okay, so when you become 65, you need to apply for Medicare. When you're 65, 3 months before or 3 months after, period. That's all you need to know. So
yeah, if you
go ahead, Paul.
If you turn 65 this year, you're going to want to start enrollment in January, February, or March, or you have up until May, June, or July to enroll.
Okay, so if you were 65, what month? Because it's 3 months before you're
in April. I'm using April as the example.
Okay.
Let's say you turn 65 April of next year. You'd want to do it either January through March or May, June, or July. That would be your 7-month period. So whatever month that you turn 65, just add 3 months or subtract 3 months, and that's your 7-month period.
Right. And again, that's if you have not started collecting Social Security, because if you started collecting Social Security prior to 65, you do not have to do anything. Social Security will automatically mail you that Medicare card.
Thanks both. Next question is, does a 6-month-long medical disability leave at age 62 impact my Medicare?
No.
Great. That's quick and easy. Next question is, does Medicare cover nursing home care? And also, can you enroll in Medicare if you own a home?
Okay, I will take the second question. Paul, you can have the first.
Yeah, that's fine. So no, it's not going to cover a nursing home. There's additional federal benefits that can, if someone needs to use a nursing facility, there's additional benefits that they may be available for them, but it's not part of Medicare.
Yeah.
That'd be part of what's called Medicaid. Yeah.
Right. And
correct.
And also, can you enroll in Medicare if you own your own home? Absolutely. It doesn't matter how many homes you have. Medicare is eligible. You have eligibility for Medicare. Yes.
Okay, so there's a couple of parts to this one to take into consideration, but say if I work until age 75, my spouse and I are covered with a employer-sponsored health plan right now, and I'm already collecting Social Security. Is there a penalty when I retire fully?
No. So if you are the 75-year-old person and you have the credible health insurance through your employer, when you terminate employment, again, complete the special enrollment letter and the CMS Form 40B, which is again at this slide, and no penalty will apply. But again, I would sign up the week you terminate employment to avoid any penalties.
Great. Next question is, in general, how does having coverage with a company that has less than 20 employees, impact Medicare enrollment requirements?
Again, I would recommend talk with your HR. If they have a plan that is compatible with it, then you can choose. If not, then you're going to need to go on to Medicare. And for a lot of small companies, the reality is most of the time, what the general trend I've seen is when someone turns 65 and they work for a small company, they typically go onto Medicare at that time because even if they're eligible otherwise, it tends to be more cost effective for them, just because they're paying for most of the insurance premiums anyways.
Perfect, guys. Next question is, if I have coverage through my employer, do I still need to enroll in both Part A and B? I think we've answered that a couple times. So next is, my wife was disabled and on Social Security. disability. When she turned 65, she was automatically moved to retirement and enrolled in Medicare Part A. Since I continue to work, she's covered under my medical plan and is not enrolled in Part B. Does this penalty apply to her in this situation?
No, no, because she's covered under the spouse's employer, and all she will need to do is get a letter from the person working saying that he had the spouse cover for Medicare or under the health plan from 65 to the present, and there won't be any penalty.
Great, and so, I mean, just real quick kind of housekeeping, we are at the top of the hour. This was meant to be the end of the session today. So for all of you that need to drop because you have other engagements, please do so. Thank you for attending today. We have a ton of questions outstanding and still a few hundred people on the call. Paul and Yolanda, are you okay to continue?
I am, yeah.
Absolutely.
Cool. So with that, thanks everybody that needs to drop, but we will continue more as a value add for everybody that has questions outstanding. Next question is, if my husband and I sell our home and clear $500,000 in equity, does that impact our Medicare? We are both 70 years old.
That would only impact you, well, primarily that would impact you if you're in that 2-year window, but I'll let Yolanda, again, the story Yolanda told of like her mom and how that had a short-term impact.
So that income, if you sell your property and you're not buying something else, it's going to be how it's reported on the adjusted gross income. I am not a tax professional, but I can tell you that if you're a couple, your exemptions are even greater. So again, I would just talk to my tax prep person that prepares my taxes and see if that income, where your income will be. If it's not, if it doesn't count, then obviously, no, you wouldn't have a penalty or not a penalty, but a higher increase.
Okay, so next question, and I think this is from somebody that's already applied for Medicare, and it started a month earlier than they were hoping for, say June instead of July. They still had insurance from their employer until the end of June. They sent an appeal letter and are just wondering if they will adjust our start date to July and the premiums accordingly. Well,
with the pandemic and the offices being closed, I would just say it's going to be a tad difficult. It's all on how the paperwork was completed, and if they can amend it, they probably could do it. But right now their workload is like 5-6 months behind, so you can keep trying.
Great. Next question is, does Medicare cover me when I'm out of the country for several weeks, or does that depend on any specific provider?
No, Medicare does not cover you when you're out of the country.
And next question, you mentioned a 20% item. Is there a maximum for that rule?
For the Medicare, oh, no, the penalty, it could go as high as 55% or 50%.
I think they're referring to the 20% deductible, the 80-20 split on Part B.
Oh, the 80-20? Go ahead.
Yeah, so on Part B, Medicare will cover 80% of the expenses. You would be responsible for the other 20%. And correct me if I'm wrong, but I do not believe that there's a cap on that number, Yolanda.
No.
Okay, next question is, do 1099 tax exchanges on income property affect Medicare?
No. Those are tax neutral.
Great, quick and easy. Next question is, what is the difference between Medicare Advantage policies and Medigap policies?
Okay, so let me get back to that slide real quick here. Okay, so Medigap, Medicare Advantage is technically called Part C. Again, it's some private insurance. Yolanda, do you want to kind of jump in here on the Advantage plan?
Okay, so the, you know what, I'm going to have to first tell you what Medigap is, the difference between Medigap and the Part Advantage. Medigap is you have original Medicare, and all you do is have a supplement to cover what Medicare doesn't pay, like your deductibles, co-pays. the Medicare, oh, and you can go to any doctor you choose to go, okay? But when you have Medicare Advantage, you're basically locked into an HMO. So you can only go to the doctors that you sign up for, right? So if you're a Kaiser, Blue Cross, Blue Shield, you're locked in to this group. It's an HMO. Whereas Medigap, you still can go to the physicians you want, and they'll help you pay for these premiums or supplements. So Paul, if you want to, give it a different twist to that.
No, I think that's great.
Okay.
And so next question is, what if you have a doctor that doesn't take any insurance? Is there still a reason to do Part B?
Well, then you have to sign up for your own, it's all out of pocket expenses then. Yeah, it's all out of pocket. If your doctor refuses to take Medicare, then it's out of pocket.
Okay, so next question is, back to the Medicare Advantage and the Medigap is, can you have both the Advantage and the Gap?
Good question.
No, it would be one or the other.
And then
they're kind of competing policies. Yeah, good.
Oh, that's it.
Yep.
So next is, can we post the SHIPS info in the chat? Yeah, I'll post that in just a second when I get to a question they can answer. The next one is, can we post the 5K help link info here in the chat? So, I'll post both of these into the chat in just a couple moments. Let me get to a question so I can go navigate that these two can be answering while I do that. Next question is, what is the special enrollment letter that the employer needs to write? I thought you only need the CMS 40B from the employer.
You need both, and I believe your financial advisor may have a copy, your employer may have a copy. If not, Paul, I do believe that I had uploaded that letter, the special enrollment letter. Or Chad, I think you have that. You can post it on we'll post the link for you so you can get that special enrollment letter.
Yep. And then, so the next one is, where is the link to last week's presentation? Can we provide the slides for the presentations? Yeah, so all of those, you should have received an email for that directly following about it the next morning after our presentation last week. We'll have the same thing for this presentation today as well. If you did not, please email one of us. You can email me directly, that's chadn@bfsg.com, or as on the contact slide at the very end of this, financialplanning@bfsg.com, and we will send you a link that you can download the presentation. Next question is, does Medicare cover travel to U.S. territories such as Puerto Rico?
Absolutely, we count those as USA, good old USA.
And then next is, do I have to submit any forms to Medicare if I want to stay with my employer's health insurance, thinking over 1,000 employees after the 65th birthday?
No. The only thing the only thing you have to do is let's make sure this is really clarified for you. When you stop working, after your 65th birthday, you do have to provide the letter, the special enrollment letter, and the 40B to Social Security to sign up for Medicare. Period. If you don't want Medicare and you want something else, that's fine. But if you ever have to go back to Medicare, you will have a penalty. And this is the one thing that Paul's been saying. You better check with your HR person, because they're all going to say, oh yeah, after you terminate employment, you need to sign up for Medicare Part A and B and D.
So question for you, Yolanda, that I have. For those individuals that maybe collected Social Security early, before 65, and then when they turn 65, let's say they want to stay on their employer's plan, do they need to do anything where they're typically automatically enrolled for Medicare?
Yes, they do need to return that Medicare card that they get in the mail. You sign it on the back of the card. There's a box that you say, I don't want Medicare, that you refuse Medicare, and then you send it back and you give them an explanation why you don't want the Medicare. And then you can always come back and pick it up when you terminate employment.
And so the next question is, it's my understanding that once I reach Medicare age, I can no longer make or receive HSA contributions. I am still working and participate in a high deductible plan, but I've had to stop HSA savings. Is that accurate?
To my knowledge, yes.
So are there any HSA programs that are a use it or lose it?
No, there is, so there are what are called health savings accounts, and then there's an older program called an MSA, which is a medical savings account. The medical savings accounts are a use it or lose it proposition, where the HSA was created in response to the high deductible health plans that came about a few years ago. And those are not a use it or lose it. So they're separate programs.
Great. And so the next one is still on the HSA topic is if you're contributing to HSA when you're Medicare eligible but not enrolled, can you continue contributing to your HSA?
That is an excellent question. I don't believe so, but I would need to confirm that. So that's actually an excellent question. If you want to leave your information, I'd be happy to get back to you on that, unless Yolanda has something.
No, because the HSA, I'm just not at all good at answering questions about this. Okay. Yeah, I'm sorry. That's just not one of my fortes.
Yeah, so if for whoever asked that question, if you're able to send us a question, you're an email directly, we can look into it for you. Next question.
Yeah, so again, just email me here at the financial planning website and we'll get back to you. Excellent question.
Next question is, my current Medicare Part B premium is based on my 2018 income. Are we saying on this call that my Part B premium will always be determined by my 2018 income regardless of my income in future years?
No, that's not what we're saying. Your Medicare premium will always be based off of the last 2 years. So it's always looking 2 years in the past. So eventually your 2020 income is going to be for your 2022 Medicare premium. But if you have a life-changing event today, you can always complete a form saying, hey, this is my situation, and it would be reflective. For example, 2020, if your income has dropped, they would use your 2020 income for your Medicare premium.
Next question is, if you keep your income low in age 63 and 64 to qualify for lower Part B rate and then start to recognize more income greater than age 66, will they see that and adjust your rate anyways?
Let me tell you how this, go ahead, Paul.
Go ahead, Linda.
Okay, well, I'm gonna read this again in my head. Because when you reach the age of 65, if your income has changed dramatically, they're looking at that year's income or the 2 years prior. So if you were playing the game of reducing your income 2 years prior, yes, they would use that. But it's not the first 4 months. They're looking for the entire year because they're looking at your tax return. Does that make sense?
Yeah, and to help answer that question too, when I was talking about being careful with things like Roth conversions, typically when we're doing, for example, Roth conversions with clients here, there's 2 different numbers that I'll look at for a client that's in this situation, that's 63, 64 age. The first one is going to be their tax bracket. So let's say they're in the 24% tax bracket, which for a married couple, I believe goes up to $316,000. You're going to look at that bracket to help and do what's called a fill the bucket approach, where you're going to try and keep, you'll convert on a Roth conversion, for example, up to the amount that keeps them in the same tax bracket, but try not to go higher than that. So look at that number 1, but then you'll also look at these numbers here as well. And that could, because that also needs to be considered when you're doing those Roth conversions planning. So when I'm helping a client with that, for example, no, we're not going to try and delay things to just 63 and 64 and then have them pay higher rates down the line because all we've done is deferred income down the road playing some shell game. But the goal here is to do proper tax planning to keep you in a lower bracket. And so instead of going from 202 to 376 back to 202, try and even it out over a longer period of time. hopefully that kind of helped answer.
Thanks. So the next question, and hopefully I get this right, based on how it's worded, I will qualify for Medicare and have an employer contribution for medical premiums. Do I still need to pay the premiums for Part B and D?
I will qualify for Medicare. Okay, so if you have employer contribution, that means you are still working. If you're still working and you have health insurance through your employer, you do not have to pay for the Part B or the Part D because you have group health plan through your current employer. Chad, is that what you understood?
Yeah, that's how I think it was asked, correct.
And you know, Chad and Paul, I know that these questions of Medicare, they really are confusing. And our worst fear is not to have the proper health insurance. So, you know, that's why Paul and I are happy to stay on the line here with you, because I know I see the same questions coming up again, and I'm happy to answer them over and over again, because for me, well, at least at my age, I need to hear it at least 6 times before I get it. So, but that's me, right? So yeah, let's just keep going with repetition, because repetition is what makes us better.
Yep. Next question is thinking about the income. Is the income based on a tax year? So for instance, if you work only the first 4 months and you have reported income for the whole year is 4 months, or is it based on like a 12-month rolling period such that it would start the prior year, April to April?
It's based on calendar year, January through December of each year.
Correct.
So what happens when at age 65 we get Medicare and still continue with the employer insurance?
Again, you if you have employer insurance, you stay with your employer insurance if it's the best plan for you. And Paul had said earlier, if it's less money to sign up for Medicare and drop your employer, great. Otherwise, you would stay with the employer and then pick up Medicare Part B and D when you terminate employment.
And so next question is, if I have Medigap, how do I cover for dental and vision insurance?
You can call that number that Paul and I gave you earlier to see what insurances are out there that will help you, okay? The HICAP, Health Insurance Advocacy Group. And again, we're giving you this number because they're not making any money. They're just there to give you free advice.
Next question is the amount we use to pay for premiums for Medicare and Medicare Advantage deducted from our taxable income when we retire.
No.
That was a no?
No, that's a no.
Yep. So next is, did you say converting to Roth could boost your income? If so, how and why?
Yeah, so the answer is yes there. Let's say you do a conversion of $30,000. So you have a traditional 401k, for example, and you want to take $30,000 from the traditional 401k, which has been growing tax deferred. So that money's never seen taxes before. And you want to move it into a Roth account where everything is after taxes. Well, what happens from an IRS perspective is you're taking money that's never been taxed and moving it to money that is after tax. So in the year that you do that conversion for $30,000, that would increase your taxable income that year by the conversion amount. In this example, that would be the $30,000. Because again, you're just simply taking money from one bucket that was never taxed to another bucket, which is fully taxed, which is after tax. So that's what causes that short-term increase in income from a tax perspective, at least.
So next question is, if I only register for Part A to lock in future premiums, but want to keep my private insurance, does Medicare become my primary insurance provider?
Okay, this is going to be, there's too many parts to this question. You register for Part A. You're basically not locking anything. All you're doing is signing for Part A hospital, which is free. So you are not locking any future premiums, okay? Because Part A is hospital. What you are doing, if you wanted to speak a lock-in for future premiums, would be the Part B, the doctor's portion, the doctor that the part that pays the Part B, 80% of your doctor plan. So the question really is the Part B. If you sign timely, then you would lock in your premiums for the Part B, and not lock in the IRMA. Okay, the adjusted, the Medicare income related monthly adjusted amount. That's a whole different conversation.
So that's good. So it's in a couple questions. Let me just get to that one right now. So what is IRMA for Part B?
And here Paul has it, IRMA for Part B. And you know, I just want to really highlight this. You're either paying $144.60 for the Part B of Medicare, which is the doctor portion, or you can pay as high as, and I made the numbers here, $568. I know that we only have $491 at the bottom because this does not include the drug prescription plan. So if you were to put in the drug prescription plan, it would actually go up to $568. So the what is IRMA?
IRMA
is
stands for income related monthly adjustment amount.
right.
And that's just simply the amount that you're paying above the 144. That's all that IRMA is.
Yeah, so
Whatever
if
that
you're a wealthy senior, then you're paying a higher Medicare Part B premium, and the Part D premium is going to be. And these numbers do not reflect the drug prescription plan because that's another category.
So our next question is, after enrollment, is someone forever stuck with that plan premium, or is there an opportunity to switch plans later?
Yes. Yes, there is. And Paul discussed this earlier because anytime between October and December, you can sign up for an extra, or not extra, for different types.
Yeah. On the slide here, it's just that open enrollment period. Again, like Yolanda said, it's from October 15th through December 7th of each year that you can enroll and make changes to any of your plans, to your Medicare Advantage or Medigap plans.
So our next question is, regarding the extra help of $5,000 per year, what's the maximum income for a single person to get that extra help?
$14,610.
And the next question is, looking at the 40 credits that are necessary to qualify for Medicare, are these 40 lifetime credits, i.e. up to the point someone is ready to file for Medicare?
Yes.
And the next question is, in the case of disability, what options are available for health coverage in the 24-month period before Medicare starts?
Well, usually that would be your your employer's health insurance. Usually that would be your health insurance, your private insurance. A lot of us who pick up that, private insurance, they would pay up until for the first 24 months, and then you have the Medicare.
And so then the next question is, how much do you pay, in addition, if you enroll in Medicare Advantage to cover the dental and vision? And does it also cover prescription drug Part D?
This you're going to have to contact the Advantage program because there's so many programs. Some offer dental, some offer vision, some offer both. You just need, and usually they all cover the drug prescription plan. So when you start inquiring, you'll find out what you have available.
Yeah, you'll need to talk with a licensed individual on that sells it, because that can vary just from zip code to zip code even.
Mm-hmm.
Great. Next question is retirement considered a life-changing event?
Absolutely. For these premiums, it is.
Cool.
In fact, that's part of the question on the form, the SSA 44, yes.
Okay. Next question is the premiums based on your last 2 years working or the 2 years prior to turning age 65?
So again, that 2 years is rolling from the time that you initially enroll in Medicare. So for most individuals, it starts at 65 and then it's rolling each year. So for 66, it's 64 and 65. For 67, it's 65, 66, and so on.
Okay, so next question is, my spouse collects Social Security. However, I'm employed and have coverage for both. Can myself and her get the Medicare when I retire? Is there any type of penalty?
No, you're under the special enrollment period.
And next is just about how premiums are paid. Are they paid by check or direct deposit? How do people pay their premiums?
A couple different answers here. Part A, you really don't have to pay. Part B, if you're collecting Social Security, it's deducted from your Social Security paycheck each month. If you're not collecting Social Security, but you're on Medicare Part B, that you have to pay either online, mail in a check, something like that. And then if you have like a Medicare Advantage or a Medigap plan, that would be a separate premium that you'd be paying directly to the insurance company each month.
Great.
And so the next question is a clarifying question from an answer earlier. Is I thought we said that you may be able to turn over your Medicare coverage to your insurance company and they will cover you and you would pay all your premiums to them.
So you still pay the Medicare Part B to Social Security. The rest goes to that insurance.
And so the next question is, if I sign up for Part A at 65, but keep my employer's insurance and retire at 70, then sign up for Part B, will I have to pay a penalty on the premium?
No, you don't. Again, you have to bring in the special enrollment letter and there is no penalty.
And so the next question is, if Social Security uses the last 2 years of income moving forward on a rolling basis, why do we need to complete Form 44? Since Social Security already knows your income has decreased in the most recent 2 years.
Oh, Susan, that's a great question. But the only thing that happens here is, let's say we're in the month of July, and if I was to stop working today, no one knows anything about that other than me and the employer. So that's why I would complete the SSA 44 so I could be pardoned as of 2020. I'm now showing Social Security change my premium because I am not that person who is making, X amount of dollars. That's the only reason. They don't know that you've just retired or had a life-changing event.
So just a few questions left. If I retire and begin collecting Social Security at 63, am I automatically signed up for Part A and B, or just A and I need to sign up for Part B at 65?
Well, you can't do any of that. You can't get Medicare until you're 65. So at 63, you can start collecting Social Security, but you cannot sign up for Social Security until 65. And what we said earlier is it will come to you automatically, both A and B. The D, the drug prescription plan, does not come to you automatically. You still need to apply for that.
And so next question is, I'm a government employee with a pension, so I won't get Social Security because of the windfall elimination, but I do pay Medicare taxes. If I only have 27 credits, do I need to get to 40?
So if you are married to someone that does have the 40 credits, you can piggyback off of their record. If you are divorced and had a 10-year marriage duration and they have the 40 credits, you can again piggyback off their record. If you have, well, in your case, you have 27 credits, the Part A would cost you $458 per month. The Part B, it's $144, or depending on your modified adjusted income.
So next question, if I defer my retirement at the time my spouse retires, should I still enroll in Medicare to avoid penalties?
So if you're saying that your spouse is going to continue to work and cover you by their group health plan and you are over the age of 65, then no penalty applies, because when your spouse retires, you're going to have the employer document that you were covered by the spouse up until 65 to whatever age they retire.
So next question is, did we say you cannot contribute to HSA after I begin receiving Medicare?
Correct.
Yep. And then, so next question, this is going back to, I think, last week's session, is what are our thoughts on the sustainability of Social Security? Maybe keep this brief.
I have absolutely no doubt that Social Security will always be there. Social Security is so important to this nation that it's not going to disappear. If we're asking the question, in the year 2035, are we only going to pay that 77, 79%? I believe that the government is going to do something to make it whole. We just don't know how quickly that's going to happen. And I've been hearing this for the last, 40 years. So again, my thought is, it's there.
Short answer is it's going to stay there. There'll just be some changes to what it looks like today, most likely.
Well said, Paul. I like that.
So next is, I'm saying I must have missed the answer. I was told you have to apply for Medicare at 65 in order to avoid penalties, but to defer it to avoid paying penalties or monthly premiums. Is this correct?
Paul, you want me to answer that?
Yeah, go ahead.
So no, you didn't. Okay, let's clarify the question again. At 65, you would apply for Medicare unless you have health insurance through your group health plan or your spouse's group health plan. If you do, you don't have to do anything. Then maybe apply for Part A if you like it. Even that you don't have to do. But when you terminate employment and you're over 65, bring in the special enrollment period. The special enrollment letter, not period, enrollment letter.
So I have two more questions in the queue. We'll make these the last two questions. If any others do come up, please shoot us an email with our contact information and we'll get back to those. So last two questions, is the income 2-year baseline the combined 2 years for the income total?
No. I mean, it's whatever your tax report is showing for each year for the last 2 years. Or you know what, Paul, I think you better answer this. Rephrase it.
Sure. Yeah, so again, using an example, they just look at whatever the current year is, they go back 2 years. So if they're looking at your income when you're 67, they're going to look at 66 and 65. When you turn 68, they're going to look at 67 and 66 as an example. So it's a rolling 2 years.
And I mean, maybe to clarify, is it like an average of your income over those 2 years? Is the idea?
There's a formula used by Social Security to determine that, but correct me if I'm wrong, but I believe it's essentially an average, Yolanda?
Average? No, they're looking at exactly the tax return. So we're in 2020, they would look at 2018, whatever that number was, the modified adjusted gross income. 2019, they would look at that year.
Okay.
And then the last one is, if I work till age 75 and the spouse and I are collecting Social Security, his total taxable income is less than 174,000 as of today. So my Part B monthly premium would be 144. Is that correct?
Paul, oh yeah, bring that slide, Paul.
There we go. There we go.
There you go. The answer is?
Okay, so 174.
Yeah, at the
less
top.
than 174.
Yes.
Got it.
And that's adjusted gross income again. So then 144.60 would be the premium.
Okay.
Well, thank you so much, everyone. This has been fun. Enjoyed it. Hope we found it helpful.
Thank you so much, everyone, for taking the time.
Thank you all. Again, please let us know feedback in any future topics via the survey links that you received. Again, we will have links to both the replay for last week's Social Security session, which is on demand, as well as a replay link for this Medicare presentation. And then please join us for the next week for estate and legacy planning as we continue our summer webinar series. Thank you all for joining and have a great day.
Good day to all. Bye-bye.
Thank you guys. Bye.